Whether you are brand new to crypto, brand new to trading, or have been trading for a while, you'll be able to use this simple trading strategy that I'm about to show you for trading cryptocurrency or Bitcoin. We're going to go through 4 steps in this video. Number 1, setting up the chart and using the candles. Number 2, setting up the indicator, the whole moving average, and being able to use that. Number 3, putting them together to make an entry strategy. And then number 4, using an exit strategy and stop losses. By the end of this video, you'll be able to start trading crypto today. And if you like this content, please hit that subscribe button and let's get right into it. First, let's talk about hikanashi candles. What are hikanashi candles? They are similar to traditional candles, but slightly different. They use a different formula, which helps to filter out the market noise so you can see trends more clearly. Let me show you now how to set up and use hikanashi candles on the Bitcoin chart. Here I'm using TradingView, which is a free platform online that anyone can use. I'm going to type in BTC USD, so I'm looking for the Bitcoin US dollar. Here we see I'm using the weekly chart of Bitcoin. To set up hikanashi candles, you simply click on this candle button and click hikanashi. You can already see how easy to identify the trends on the chart. Here we see a strong uptrend with a red downtrend, and then an uptrend, and then a downtrend. Now let me explain how to interpret the candles on the hikanashi chart. The color of the candle tells you the trend. Green is an uptrend, red a downtrend. The body of the candle, not including the wicks, tells you the strength of the trend. A long body tells you it's a stronger trend, while a shorter body tells you it's a weaker trend. The wick of the candle, which is the line that comes out of the top, tells you the volatility in the market. So if you have a longer wick, you have more volatility. If you have a shorter wick, you have less volatility. So what does this mean when we are trying to interpret these candles? It means that we're looking for a long green bar with a short wick if we're going to the upside, or a long red bar with a short wick going to the downside. Let me show you some examples of those now. So, for example, starting on the left side of this trend, we see small green and red candles which don't identify a strong trend. Then, around this area, we start to see bigger green candles. And here we see we have a long green candle with a short wick on top. That is an indication to get in. That tells you that this is a strong uptrend. And indeed it was. Similarly, on the downside, we see this long red candle with a wick that is relatively short, which indicates a strong downtrend. And indeed, that's where the trend went. Some other things to note about the candles is that for uptrend, you don't want any bottom wicks. You want it to be flat on the bottom. That indicates a stronger uptrend. Similarly, on the downside, you don't want any topping wicks like this. That indicates weakness or indecision. You want a flat top just like these. Now that we know how to read the hikanashi candles, let's talk about the whole moving average. The second thing we're going to talk about is the whole moving average, which is a moving average that uses different weights of moving averages, which helps to create a more responsive figure on the chart. Let me show you how to set that up now. To set up the whole moving average, I'm going to go to Indicators and type in Whole. Here we see it populates at the top of the screen. I click it. Now for our settings, we want to change this to 26. There you go. And now this is the complete setup for trading crypto. In general, we'll be looking for a long position when the candles are above the moving average, and we'll be looking for a down position when the candles are below the whole moving average. Going back to our chart, here we have candles above the whole moving average. This would be an area where we would be looking to get in. Similarly, on the downside, we see that the candles are below the whole moving average. This would be an area to go short. So let's now put the two together, hikanashi candles and the whole moving average, and see some examples of when we would get in to the upside and to the downside. So here we go. Let's go back to 2021 when Bitcoin took off. We see here that in 2020, it was just going sideways. They were very short red and green bars without any obvious trend. Then it started to hold above this whole moving average. This should have made us raise our eyebrows. But even though it's above the whole moving average, these green candles are short, so they are not positions that we would want to take. Then it put in this green bar, which is a little bit bigger, and this one, which is definitely big. So for sure on this bar here, let me circle it, this candle here would be one that we would get in. Why? Number 1, we see that it's above the whole moving average. Number 2, it is a green bar indicating an uptrend. Number 3, it's a long-bodied candle, which indicates a strong uptrend. Number 4, it has a short wick on top. And number 5, it has a flat bottom. It meets all our criteria for getting into the uptrend. Now let's look at a good example on the downside. Here we have this candle here, which is below the whole moving average. It's a long-bodied red bar with a short wick on the bottom and a flat top. This would be an indication to sell. Step number 4 is our exit strategy and using stop losses. We're going to be looking for an exit when the candles show us that there's a weakening of the trend, which is depicted by either a shorter candle or a longer wick or a change of color of the candle. And we'll see some examples of those right now. So let's start with our first move where we got in at this green candle here. Remember, it's a long green bar above the whole moving average with a short wick on top. What we would do is you would hold all the way so long as these candles are long and green with a short wick. Then we see here on this bar, and let me circle it, this green bar, we start to see some weakness. Why? Because the body of the bar is not as long as the previous one. And if I zoom in, we see that there's a little wick forming at the bottom, which indicates weakness. So we could get out here, or if not there, then definitely on the next bar, which is this bar right here. And this is basically a bar that shows indecision. There's a wick on top, there's a wick on bottom, and there's a very small body. That indicates that there's both buying and selling pressure, and the market hasn't made up its mind what it wants to do. So I would probably get out at the bar before, but you could also hold and just get out on the following bar. Now let's look on the downside. If we had gotten in on this red bar, which we had talked about, which is a long red bodied bar below the whole moving average, we would hold, and then this bar here, let me circle it. This bar here shows some weakness. Why? It has a small body, smaller than the one prior. It has a topping wick, which remember shows weakness in a downtrend. So we could get out here. In terms of stop losses, when trading crypto, I highly recommend using stop losses as crypto is known for being more volatile than other markets. For your stop loss, you should put it below the prior candle. Let me show you some examples right now. Going back to our first trade, where we could get in on this green bar here, what we would do is put our stop loss below the prior candle, Then, once the next day came, we would move up the stop loss to the next candle, which would have been the original candle where we got in. And we would continue doing that so long as the market moved up. Let's look on the downside now. We would do the same thing. If we got in on this bar here, we would set our stop loss up here below the prior candle. And then as it moved down, we would continue to move the stop loss to the next prior candle. And we would do that all the way down. So now let's put it all together and let me show you a trade from beginning to end, including the entry, the exit with the stop losses. For this one, I'm going to use an example that we didn't work with much to show a fresh example. Let's say we saw this trend here, and then all of a sudden we're above the whole moving average, right? And then we see this big green bar with a flat bottom and a long body. We could get in on this bar. Where would I put my stop loss then? I would put my stop loss here, and we would hold, and then the next day we would see this green bar, and then I would move my stop loss to here. And then the next day we would see this big green bar. Remember, these are all still very strong trends, long bodies, flat bottoms, green bars. We would continue to hold until we saw weakness. So my next stop loss would be here. And then we would continue this process until we got all the way up here. And are you able to identify which bar shows weakness? You could say this one, yes, this one definitely shows weakness, but you can also see that this bar before that one has a small wick on the bottom. So that could have made you raise your eyebrows and say, do I want to be aggressive and hold, or should I get out now? Either one would have been fine. If you had held, you could have put your stop loss, or you would have put your stop loss here at the bottom of that bar, and then when this bar started, it would have knocked you out right there. Or if it started below this line, it would have knocked you out wherever it started. So you would have had a nice uptrend, a very clean trend here. And then as a bonus, I'll show you going forward, these bars here, these are nothing bars, right? These are very indecisive, small-bodied, wicks on both sides bars, so you would not do anything. And then you see that it broke above the whole moving average with a larger green bar. This bar is not even large enough for me. I wouldn't get in here. Maybe the next bar. This bar is nice and big, short wick on top, no wick on bottom. I would get in here, put my stop loss under here, under the prior bar, and then repeat the process. And then my out bar would be this one here, because it shows weakness. So I hope this video made trading crypto a little less daunting. Let's summarize what we've learned today. The first thing you want to do is set up your hikanashi candles and your whole moving average. Then for a trade to the upside, you'll be looking for candles to be above the whole moving average. You'll be looking for long, green, short-wicked candles. And for the downside, you'll be looking for the candle to be below the whole moving average, and you'll be looking for long, red, short-wicked candles. If you're on the upside, you'll hold the position so long that the candles are long and green with short wicks. If you see a change of color, or you see a shorter candle, or you see a long wick, that is an indication to exit. On the downside, if you see a change of color from red to green, or you see a shorter candle, or you see a long wick, that would be an indication to get out. And then, of course, using stop losses, especially in crypto, is very important. If you like this content and you felt like you learned something, please hit that subscribe button. I would really appreciate it. And we'll see you next time on Mad Traders.